Kicking it off, first opportunity. First thing to talk about is CAVA. We talked about this a little bit before. CAVA is a very curious equity, and it's very near and dear to my heart because CAVA actually started in Rockville, Maryland, 20 minutes away from where I live in 2006. They've been in the area for forever. They're a mainstay in the area. So they're a local homegrown company. Super excited to talk about them. Let's hop straight into the chart. When you're looking at the equity, we're looking at the performance. This thing IPO'd really recently. As you guys can see on the chart, this thing has only been around since June 12th, 2023. It's wild. So when you look at the performance since the IPO, we are already up 130%. This is 130%. This isn't even 12 months of price action that we're seeing here. So there's definitely a lot of excitement. There's a lot of interest in this equity. They actually report earnings later today. They'll be reporting earnings later this afternoon. So the question is there an opportunity to buy CAVA? Let me give you the short version. The short version is CAVA is a brilliant company. They have fantastic financials. They have posted quarter over quarter growth in earnings per share, in revenue, in amount of locations that they're opening, and they have a great trajectory to have 1,000 locations, almost 700 more than they have right now by 2034. So just 10 years, opening up 700 locations. Fantastic numbers. The long and short of it is, I'm not buying it. Why? It's so high. Look how aggressive this move has been in CAVA. It's very hard for me to buy this opportunity when we have so many other opportunities in the sector, like a Chipotle, like a Starbucks, that do the same thing more or less, have a lot more in the way of money, and have already proven a track record. But let's get into it. Let's get into it really quickly, and I'll let you guys decide for yourselves whether or not this is an opportunity that you're saying, I'm not buying it. So when you look at the chart, obviously, super aggressive move to the upside. We've seen far more green days than we have red days in the past few months, really since the end of November, October, we started to see lows. As we saw more and more earnings reports, we saw nothing but positive numbers in regards to earnings per share and revenue, which is always very exciting. Um, when we break things down and we're looking for these kinds of opportunities, places to get in, there haven't really been that many areas where there have been pullbacks. This has really been the only worthwhile pullback, pulling straight into view off and then popping right off of it that you could jump in and be a part of. The rest of this chart is just something pretty to look at. It's not, it doesn't have enough information for us to make an educated conversation. Breaking things down a little bit further, because I want to talk about different pieces of the puzzle. You guys know how I feel about talking about different components of the puzzle. One thing that I really enjoy about CAVA, and one reason why I think it's still a worthwhile opportunity, although I'm not buying it today, doesn't mean I'm not buying it tomorrow. It's the fact that everyone in the space is talking up the company. This is a chart. This is a quick article from the Motley Fool. They're a huge company for media, everything stocks, everything markets out here in the US. And they blast this thing as one of the best opportunities to buy and hold for the long term potential. Why do they say that about someone like a Kava? It's because it's a restaurant stock that has done incredibly well in an inflationary environment. We talk about inflation all the time. We talk about interest rates all the time. But the reality of it is, restaurants don't do well. I think all of us know that, but not all of us have the statistics. When you're looking at the statistics on restaurants, 60% fail in the first year, 80% fail in the first 5 years. So the fact that Kava has not only failed, but has been around since 2006, nearly 10 years, has successfully franchised to currently right around 309 locations. We'll learn how many locations they have in total later today on their earnings call. But the fact that they've been able to continually produce revenue, be on earnings per share, coupled with the fact that they've been able to have so many different restaurants, of which they have a couple dozen right here in the DC area. It's great Greek food. It's a very, very, very impressive equity. And when we're in an environment where people are trying to look for the next Chipotle, the next Starbucks, something like this can be incredibly attractive. It is an IPO, and IPOs, companies that haven't been around for very long times, they oftentimes get this crazy buzz around them. And although that's a beautiful thing, although that's fantastic, although that's great to see for so many different reasons, we want to see small companies become large companies. We want to see growth in the market. Just because it's hot doesn't mean you have to get yourself involved. So the next piece of puzzle that I want to talk about just a little bit was taking a look at their actual earnings call from the most recent earnings call they had back in February, looking at some of their numbers that really excited me, like their growth in revenue. Their growth in revenue grew 52.5% as compared to 115, compared to $115 million in the prior year quarter. Restaurant openings, I mean, they had opened up in this particular quarter 19 different ones, bringing us to 309. There's a 30% increase in total restaurants year over year. All of these numbers are incredibly positive. I'm starting to run out of time here, so I just want to hit on some of the most major components. Other things that I look for in these types of performance equities are the CEO. The CEO is born and bred here, University of Maryland grad, literally a couple minutes down the street from me, a couple minutes down from Rockville, where the first location opened. The man's brilliant. The man worked for Deutsche Bank. The man worked as a chief operating officer at a very, very large snack company called Snickety Snacks. It's actually a really big conglomerate that he's been able to perform well for. And he did that position for over 10 years. So the man understands food. Very, very, very positive components that we're talking about here. Now, the only problems that I said earlier, one of the reasons why I'm not buying it are because of the other opportunities that are readily available that aren't as aggressively volatile as something like a CAVA. When you look at the market share, when you look at the total value of the companies, Chipotle has most of the market share in this space, arguably. And when you look at the market cap of that company, CAVA's worth something along the lines of $8.8 billion in terms of market cap. Chipotle is worth $86 billion in market cap. And it's done that way for a reason. Chipotle has been able to, year over year, raise their prices continuously. Oh, I know a lot of people are complaining right now about how much chicken they're putting in the bowls. They're lowering the amount of food available to their customers.
Yeah, I was going to say the social media sentiment isn't necessarily there. It's starting to turn on
the
them,
social media,
and that's
the social media
go ahead.
sentiment's not there at all. But the thing is, they're making so much money hand over fist. They've been able to raise prices continually, and they've seen more traffic come through their doors day in and day out. The same is true of Starbucks. Starbucks hasn't performed as well as of late, but they've been able to grow their locations time and time again. They've become an international brand in every sense of the word, and that's allowed for so much opportunity in terms of equities. Another piece of the puzzle, Chipotle's 50-1 stock split. We've seen several stock splits happen over the past couple of years. And what's happened with most of the big names, we've seen stock splits become a major play to the upside. Does this mean that Chipotle is going to do a stock split, hit $100? I believe that's what 50-1 would make it, something around $100. Does that mean that Chipotle gets to be $100 and then immediately shoots up to 200 within 2 days? I don't think so. But what I do believe that's going to happen is right now, Chipotle trading at around $3,000 makes it a very exclusionary equity to a lot of retail. Retail isn't crazy valuable in pressing up the value of an equity, but it can be another piece of the puzzle that helps things to move forward. So when you have opportunities like this that are moving in that direction, that is exciting. Now, like I said, guys, CAVA is an opportunity that I'm not buying today. but it's one that I'm interested in potentially buying tomorrow. In a couple months, we have some more data. I'm very interested to see what this thing can do. What I would love to see is a good earnings report today. We push aggressively away from VWAP, and then we return, find ourselves under VWAP for just a couple of days, and start to find some strength at this previous pivot around the $60 area. Once we get to that space, once we start to establish some value, once we start to establish some time in the market as a public stock, then I believe this will be an opportunity that's truly worthwhile. That's all I got for CAVA.